Hi, Martin Turner here. This week we look at the importance of first considering a firm's strategy. We then look at whether a firm's accounts can be trusted. We need to look at our firm's accounts critically to assess whether the judgments being made by management in the accounts are seeking to communicate the realities of our firm to outside parties. First, we start with a review of what we looked at last week. Hi, Martin Turner here, and welcome to the Week 2 lecture for ACT 13017, Financial Statement Analysis, How a Firm Adds Value. Now today, our agenda is going to be a review last week, and then we're going to look at a firm's strategy and ask ourselves, can the accounts be trusted for our firm, and look at some issues around that, and then do a minute paper. But before we get going, we've got a guest lecturer today, and I'd like to welcome Jane Morris, is a principal and director of Evans Edwards, which is one of the major accounting firms here in Rockhampton. They also have offices in Yeppoon, where I think Jane spends a fair bit of her time, and also in Emerald. But it's great to have you here, Jane. I'll just hand over to you. Jane will just talk to us briefly about, it's really some of the things that her firm and herself looks for as they're recruiting new staff, and also we'll just open up to questions. Jane.
Thanks, Martin. Hi, everyone. So just a little very brief background of myself. As Martin mentioned, I work for Evans Edwards, accounting services. I've been here for, should I say, about 20 odd years. But I did start basically coming in as a junior/intermediate type accountant, and then worked my way through into a management position, and then eventually into a principal position. So I guess from that point of view, I can offer a little bit of insight as to how that works and what that journey is like. So certainly if you've got any questions about that, feel free to shoot them my way. I guess probably the biggest thing I really wanted to get across today, or probably the biggest misconception about accounting and accounting as a to take it on, it's not so much about numbers. And I mean, yes, as doing a uni degree, and obviously we do a lot of accounting, and there's lots of debits and credits and all those sorts of things to think about. But at the end of the day, what you're dealing with is people. And you're dealing with people's financial information, which is obviously usually quite near and dear to their hearts. So the better that you can have communication skills and be able to deal with people and create really great relationships is the best way to advance your career at the end of the day. It's quite funny because, yes, you're doing an accounting degree, but it's communication skills that are really, really important. So when you're, if you're coming to our firm to interview as, say, a junior type accountant, we're looking for not necessarily your technical skills, because at the end of the day, you can teach technical skills. But what we're looking for is that you can have a great conversation with us, and you can establish those communication channels really well, both written and oral. And so what we always look for is the fit of person. So it's never really about, the fact that you might have got high distinctions the whole way through uni. Yes, that's great. But at the end of the day, it's the fit and the culture and the fact that we feel that you'd be able to deal with our clients how we would expect that we would deal with them on a daily basis. So for us, that's very, very important. And also as a new recruit coming in, it's looking for a questioning mind, I guess you'd say. So yes, I mean, certainly when you're coming into a new work environment, there is tons of stuff to learn. There's always that, but it's having a little bit of a questioning mind as to around why we do things and how we do things, and being able to run with that a little bit yourself. So being resourceful in that way that, you can go and find some information and be able to come back and be a little bit more proactive I think that's probably definitely the two big things that we look for when we're recruiting at the end of the day.
Now, you said that you look at communication skills and fit into your work culture and a questioning mind and being resourceful. Grades are not the be and end all, but how important are grades?
I mean, certainly we look at grades, and I think, you know, if we see a lot of fails, or you know, you've had to have a second go at a lot of things, sometimes it doesn't necessarily change our mind, because as I said, Martin, it's not so much about technical skills, because technical skills can be taught, but it is still definitely more about relating to that person at the time and during their interview, and just sort of gauging those other skills as well. So because it is a real mix, it's the whole person. So like I said, you know, yes, if you come in with all high distinctions, and you know, we've seen that before, and that person might have a really, really great technical mind, but to be able to then speak to people is often quite a challenge sometimes. So it's really a mix. You know, it's certainly not the be all and end all, most definitely.
That's good. What questions would you like to ask Jane?
I think she sort of covered it, because I thought it might have been technical skills that employers would go for over the communication, but with what you said, it sort of makes sense that you've got to have that personality type of a thing to sort of go with it.
Absolutely, Kim. Yeah, it is very much that way, because if you think about technical skills, you can go and read a book, you can go and, you know, do your own research to solve a problem generally, but it's how you deal with that problem and how you communicate with the client around that problem that's really often more the issue. And sometimes that can create a problem if you communicate in the wrong way. So yeah, it is most definitely a mix.
Kim and others, actually, I see Chetan, you've joined us. Are any of you working in accounting firms at the moment, or are you intending to, or what's your thinking, Kim and Najla?
I'm working in one, and the ultimate goal is to actually buy my bosses out in the end.
Oh, sort of like Jane, you want to be a principal.
Yep.
Good. And do you agree with what Jane was saying or not? Do you have a different perspective?
No, I do agree, because each client's different. Like just from watching with my bosses, each client's different. So you sort of got to modify how you explain things to each client, because they're sort of, everyone's slightly different. So I do agree with that. Yeah, your communication skills, you really need to sort of have good ones to do that. That's what I've seen so far.
Yeah, and that's absolutely correct, Kim. It's always, you know, even when we are looking at onboarding clients, it's, whilst I might have made the first contact with that person, if I don't feel I'm the best fit for that person, because you're exactly right, everybody's different, you know, I may well match them or suit them to someone that can deal with them on the way that they like to be dealt with. So it's always looking for that best fit, because at the end of the day, everyone then gets what they want, and you get a good relationship out of that.
Cool, thank you.
And one of the challenges for international students too is being able to communicate and written and oral communication skills in a professional environment in English. You know? And that can be something that often students aren't developing at uni as they really need to, but a lot of your other experiences help you to do that. But it's that professional way of communicating, isn't it? And Najla in Mackay.
Yes, Martin.
Do
Yes,
you have any questions you'd like to ask? Are
My
you
mom.
working in an accounting firm currently, or are you planning to?
No, unfortunately not, Martin. Not. I have a toddler, so it's taking up most of my time. So I'm hoping that once I finish, I'm trying to get one of the graduation programs, so I can get in one of the graduation programs, so I can get some experience and involving with the work environment. But at the moment, no, I'm not employee.
You think you're going the corporate route or an accounting firm route?
Accounting firm, yeah. I'm looking for something, and that's can give me with the accounting, because as I told, I have no any technical experience with accounting apart from just what I'm studying through the university.
Do you know Maria Tyler up there?
Absolutely. Oh yeah, she's one of my favorite.
You can contact her. She's very well connected. She has her own business, but she's very well connected up there, and she she has 4 young children now. Every 2 years she has a new one.
Yes.
As you know, she seems to just...
Yes, last year I met her, and yeah, she was...
So she's very used to that idea of how to be working with young children, you know. So you can you just email her and discuss with her. She's very well connected around in Mackay.
Yeah.
But there's a lot of people operating with young children.
Yeah, which is really a bit hard, but we're trying our best, honestly.
Yeah.
We're trying to push.
Jane, how does your firm handle the issue of like people are working long at their work? It's it's a lot of commitment in work, but how do you handle the issues of flexibility or just sort of not burning out, or how do you manage staff in terms of their sort of medium-term development and handling those sort of issues? Like you'll have plenty of people with young children and all this stuff.
Oh, absolutely. And I think there's these days particularly, it's probably been around, it's probably changed significantly, I'd say probably in the last 10 years or so. But if you want to attract graduates, so even from our point of view in terms of recruitment, you have to be flexible because everybody's lifestyle is so different. So yeah, we have lots of people. We have lots of people with young children, school-aged children. So, we're quite flexible around, work hours and what they need to be. You have kids starting to go to prep and school and that sort of stuff, then obviously they can fit in a little bit easier with those school hours. But there's so many options these days around, potentially, working from home is a lot simpler than what it used to be. So, you've really just got to utilise technology at the end of the day to be able to have that workforce. Because for us, to attract graduates, you have to have that flexibility as an employer.
And there's a lot of deadlines in this business. You've probably got some today. You've got deadlines everywhere, and there's a certain amount of stress involved, isn't there?
Absolutely, there is.
In juggling everything. How does that operate for you and for your firm generally? Do you find that?
Look, it does ebb and flow, and you're exactly right. We have lodgement deadlines coming up on the 31st of March. And we've just got past the business activity statement deadline. So there's always something that you're working towards. What we try to do in terms of managing staff, you're absolutely correct. You don't want staff to feel that stressed and that under pressure. That you're exactly right. They don't want to do their job anymore. So for us, it's about workflow planning, really, at the end of the day. So we do concentrate a lot on, firstly, capacity and staff capacity. So we look at each individual, obviously take into account what hours they are actually working and are available to work, and then really just try to slot the work in to suit that arrangement. Yes, there's always some pressure, but certainly we certainly don't want people to feel like that they're that much under pressure. So we have dashboard meetings or weekly dashboard meetings. So by dashboard meetings, I mean, we have all of our work basically scheduled in. We can see the work that's in at the moment, work in progress. So at those weekly dashboard meetings, we get together. If someone's overloaded, we try to shift potentially some of that work. So it really is a team environment, and it takes teamwork. So you're not just out there on your own going, here's your work, here's your jobs, and get through them. So that's usually how we try to manage that scenario.
Some firms, Evans Edwards is a good example, this sort of firm, have the approach that they are looking for, I'm putting words into your mouth, but my observation is that they're looking for people to join them and stay long term and develop. I mean, you're an example of it, Jane.
I am.
And there's a lot of people like that. And so those sort of firms are great. And we feel very happy to recommend a firm like Evans Edwards unreservedly. People are applying for positions there. There are other firms that use the more use and abuse approach, just as in every industry. And so they're much less popular, I notice, with students. Particularly the better ones. I'm talking the better ones particularly. They're not looking for that. The better students are looking for career development and somewhere to go, and they're wanting challenge, and they're not afraid of working. A number of people by this stage, a lot of people are already organised in their workplace and have found some good places. But some people are in places that are not so good, and you might be considering other opportunities once you get towards the end of your degree as well. We have all sorts of relationships with all sorts of firms all around regional Queensland, basically, particularly. We have students I know in Western Australia and all the states and territories, and but particularly in regional Queensland, we have lots of relationships, and there's lots of people you can talk to just to, sound out sorts of things. And Jane, did you want to say anything more? I thank you very much for coming. I appreciate that. I know you've got lots of things on, and there'll be quite a group who will watch the video and see you there. But did you want to say anything more?
No, I think that's about it, Martin. But obviously, if anyone does watch the recording and they've got any specific questions, more than happy if you want to pass on my details, and I'll be happy to have a chat to them. That's no problem.
Oh, that's great, Jane. So if for those who aren't here, it's always the advantage of being live, but you can talk, but you can do that and just send me, if you want to ask a question or you just want to pick Jane's brain slightly, you can do that and just contact me first. That'll be great. Well, thank you, Jane. Thank you very much. And I appreciate it. Thank you.
Thanks, Martin.
Bye-bye.
Bye, everyone.
Hello, everyone. Well, here's our agenda today. Our agenda is we're going to review what we looked at last week. Then we're going to be focusing on a firm strategy. How do we discern what our firm strategy is? And why is it important we look at this before we look at the financial statements? And then we're going to have a look at can the accounts be trusted? And we'll be looking at a few issues around that. And then we'll have a minute paper. Now, first up, what one question would you like answered today? Have you come with a question you'd like answered?
To what extent we can trust the accounting statement?
Yeah, that's your question?
Yeah, like to what extent I can trust the accounts, and how would be able to trust the accounting statement? Even though I read that the study guide, I was still not sure how I can trust the accounting statement.
Yeah, that's something we need to ask as we're looking at it.
Yeah.
And we'll be looking at that today. That's one of our topics. So we'll get to that about how we're going to be, can we trust our firm's accounts? And how do we look into that? But we'll get to that today. That's all right. So we'll definitely be looking at that. That's something we'll really look at. And we need to do that up front. We need to see that some areas where there may be judgments involved in major items in the accounts, we need to make some sort of assessment about whether we feel we can trust them. All right, we'll move on. Now, week one, we were focusing on reality. That's what we're going to be looking at. We're going to be looking at the reality of our firms, and we're going to be seeing how to use the financial statements to help us connect to the reality of our businesses and make some assessments around how well we can do that. And last week we saw that there are many points of views we can have when looking at a firm's financial statements. There's the shareholders' perspective, the equity investors, which is the one we'll be focusing on. But there's also other stakeholders' perspectives. We can take the perspective of debt investors, debt holders of a firm, or of customers, or of competitors, or of suppliers, or of the government, or regulatory bodies, or community groups like environmental groups. We can have a whole range of perspectives in looking at the financial statements. But to give us focus on what we'll be looking at, we'll be taking a shareholder's perspective. But it's important to realise that there are other perspectives we can take when looking at financial statements. And the other thing we emphasised last week was that we're going to use two frameworks. These are like two maps in our head into which we can place the facts of our firm. Two ways, two frameworks to look at our firm: the discounted cash flow, DCF framework, and the economic profit framework. And we also saw that what it's going to take to do financial statements analysis, which we'll be doing this term, are technical skills and judgments. It's not just the technical skills, it's also the judgments. And so that's what we'll be focusing on during this term. We also saw that there are 3 short videos that are a key part of the content from last week, and you should have looked at them by now. That's the two frameworks, DCF and economic profit. That introduces these two frameworks. And then it's two frameworks focused on discounted cash flow. So that's the short video that then takes us a little bit further into the discounted cash flow framework. And then there's the two frameworks focused on economic profit. And that's where we focus on the economic profit for our firm. And if you go to the slides on the week 2 tile here, on those links are live, and you can go to the videos there. And they're also on the video link, which is on the right-hand side of Moodle if you're on a computer, or on the bottom if you're on a tablet or phone. These short videos, like these ones, are a key part of the content along with the study guide. So if you haven't looked at those yet, you should look at them. They're important. Now, another question. Is analysing a firm's financial statements simply looking at the past? Why or why not? You can answer these questions in Socrative, or you can call out if you like. Do you think that analysing a firm's financial statements is simply looking at the past? After all, the financial statements are in the past. What do you have to say?
No.
Is that Najla?
Yes.
You think no? Why not?
Yes. Because it is something that has been finished, and it's been, let's say, that's been already been taken off, like it's been earned, whatever. It's like the revenue or the profit, it's been just finished. So what we need to look, it's more about the future, the sustainability of the business, how the business can be sustainable in the competitive market, in the marketplace itself. So it's more about the future of this company, how it can persist, and for how long, the long term of the persistence of these businesses.
That's great. Yeah, we're interested in the future, aren't we? It's sort of like the equity investors go on a trip with the firm. Like my children are going on a trip with Ryman Healthcare, my firm, as their shareholders. Well, the trip that they've been on over the company's been floated for 22 years now. They've been investors in it. That's a trip that's already finished. You can't go on that trip now. That was one you could 22 years ago, but you can't now. If you buy shares in Ryman Healthcare now, you go on the trip in the future. So financial statement analysis is actually, as Najla said, is actually concerned about the future. But in order to understand the future or be able to make some judgments about that, we need to be able to understand the past and the present. So for Ryman Healthcare, I need to understand what's been driving value in the past in order to then be able to make some reasonable judgments about the future. So it's not simply looking at the past, because our main interest, as Najla said, is about the future. And here's another question. Mintzberg, in the reading, Mintzberg describes strategy as a figment of someone's imagination. What's the point of basing our financial statement analysis on figments of imagination or insubstantial dreams of people? So we're going to be looking at strategy first, but how does that work if it's just someone's imagination, just dreams of the future?
Like, it could be dreams, but you can make dreams reality too. So if they've got a desire for that, like if their desire is, I don't know how to put it, yeah.
Have you ever had any dreams about things that have turned into reality?
In some things, yep.
So how did that happen?
Just through determination and saying that, yep, that's how far I want to go, and finally got there. So
that's right. You had to put in effort and time and planning and keep working at it, and it took time, didn't it?
Yes.
So it's sort of like you had some dreams on things that you then were determined to have a good go at. And did the dreams, if you were able to achieve some of these plans or dreams to some extent, did it turn out the way you expected, or was it something different?
Not fully, but close to. So in between.
Yeah. So it's sort of like you might have this view of the future, but it sort of turns out a bit different, doesn't it? And it might have been a bit harder or easier than you were expecting, or this might have been a little bit different, or all sorts of things can happen, can't they?
Yeah, extra hurdles hop into the play.
That's typically what happens. At least for me, I always underestimate how hard certain things will be. And so, but if you're determined, what you were saying, Kim, where you've been determined, it's not just an idle dream sitting on the beach thinking, oh, I'd like to go and visit New York, but you don't do anything about it. It's not that sort of figment of imagination, is it? But it's where you have a determination to follow through and actions. Would that be fair for what you were saying?
Yeah.
Yeah. So we're going to be looking at strategy of our firms. The first thing we'll be looking at is, well, what is our firm's strategy? The chapter considers how a firm adds value. A firm adds value when it offers returns that exceed its cost of capital, abnormal earnings. This is when we've got our economic profit framework sort of map on or cap on. Adding value is when the returns a firm earns exceed its cost of capital. Ryman Healthcare has been doing that consistently for the last 22 years since it floated. So it's been adding value over and above the cost of capital. The cost of capital, which is studied in business finance, the cost of capital is the return that's required to the equity investor to give it a return that rewards the investor for the risk taken. So the more the risk, the higher the cost of capital. And if you can earn more than that, then that's an excess or abnormal earnings. That is the added value. That's the economic profit framework. Now, an understanding of a firm's strategy is key to an understanding how it intends to add value. So when we're looking at our firm's strategy, we're trying to come to grips with what's our firm intending, what are they intending to do to add value in the future. Now, financial statements can tell us, one, how a firm has performed executing its past strategies. So its past attempts at adding value. How's it gone in the past? Ryman Healthcare's been very successful. It's relatively struggled a little bit in the last year or two and compared to the past, but it's had a long, year after year, it's been adding value over and above its cost of capital. And so you can say, how did it do that? How's it going? Your firm might have been doing that, or it might have been losing value, might be destroying value, might be doing all ups and downs. How's a firm performed in executing its past strategies? So financial statements can tell us that, its past strategies, and how a firm has performed so far in the execution of its current strategies. Ryman Healthcare, like a lot of successful companies, has a pretty consistent strategy. So its current strategy is very similar to what it's been doing for many years. But other firms keep changing their strategies. But its current strategy, which may have applied just in the last year or just a few years, we can look at how it's performing its current strategies, which can also help us make some judgments about how it might perform with its current strategy in the future. Now, 1 and 2, that is back there, you can see how a firm has performed in executing its past strategies and so far in the execution of current strategies. Both of those are a look back from the finish line. So in other words, they're a look back into the past. Only useful as a guide to future performance if we expect the future to be like the past. Still, it's better to have a track record of success than one of failure. But then we have to make a judgment about whether we think the future performance is going to be like the past or different. For Ryman Healthcare, maybe they've got a whole lot of new competitors that might make it difficult for them to continue their track record from the past into the future. Financial statements can also tell us, 3, how a firm has allocated its resources to position itself to continue its current strategies. So we can have a look. A firm might be saying, oh, it's going to grow its product ranges. It's going to develop some new products. And so we can have a look to see how much has it been spending on R&D in the past, or how much has it been spending on developing some new product categories, and perhaps it's spreading into some new markets. So has a firm been spending money? Has it been positioning itself over the past year or two in a way that's consistent with its current strategies? Or is it saying, oh no, we're going to come up with these great new products and it's spending nothing on research and development, or nothing on getting itself ready? So our financial statements can tell us that. And 4, how a firm has allocated its resources to position itself to execute future strategies. So it might be saying it hasn't been doing this in the past, but it might be going to do something new in the future. Ryman Healthcare it's not, but Ryman Healthcare might be saying, oh, we're going to expand into Japan. And so how's it allocating resources? What is it doing to get itself ready to position itself in Japan? You know, is it recruiting new staff? Has it set up an office? Is it looking for new sites for retirement villages? What's it doing to execute a future strategy? So financial statements can tell us those things. It is the continuation of current strategies and execution of future strategies that will determine the firm's future value. Points 3 and 4 are looking ahead to the next race. So financial statements can tell us about the past, but they can also give us some insights into a firm's future value and to its future in terms of what it's doing now or in the recent past to position itself to implement its strategy. So a firm with a new product introduction strategy that's not spending on R&D is suspect. Progressively building staff numbers and spending on staff training would be a good sign for a company with a strategy that requires expansion. So there are hints in our financial statements. A dogmatic application of theory is dangerous. Theories like the efficient market hypothesis are theories that are by necessity abstracted from reality. So this student's saying theories are a simplification of reality. They're an abstraction from reality. That's what theories are, or models, like the efficient market hypothesis. And some say a dogmatic application. That means an application in all circumstances, all the time, unthinkingly, of theory is dangerous. And Warren Buffett noted with respect to the efficient market hypothesis, observing that the market was frequently efficient, they, the proponents of finance theory, went on to conclude incorrectly that it was always efficient. The difference between these propositions is night and day. So the efficient market hypothesis, it proposes that markets are always efficient. So publicly available information, you won't find value gaps between share prices and values. But that's quite different to saying it's frequently efficient, because, and the difference between these propositions is night and day. Now, financial statement analysis is about qualitative assessments of strategy. So we're going to be making some judgments about our firm's strategies. Like I'll be doing with Ryman Healthcare, you'll be doing with your firm. And we'll be turning those qualitative assessments of judgments into quantitative assessments of value. That means they'll be in dollars. And we'll be turning our judgments into dollars, because that dollars is what we trade in markets. And we cannot analyse a firm's financial statements without first understanding its strategy. So you need to take some time now to think about and understand your firm's strategy and make some judgments around it. People who sort of take a shortcut at this part of that get in trouble later on, because how can we make reasonable forecasts for our firm, which we'll all be doing, if we don't understand we don't have a view about what we think its strategy is and about where we think the firm is intending or planning or might go. So this is a very critical part of financial statement analysis, and one that is important to put some time into. A strategy is how a firm has or intends to add value, and it involves changing the economic and business realities of a firm to add value. So there's change, there's action, there's value creation in reality for a firm, not just in the numbers, but in what's really going on in a firm. And a firm does not add value simply by adopting different accounting treatments. So, you might change the way you're accounting for inventory or a whole range of things, and that might increase your profit. But that's not adding value. That's just in the accounting numbers. We've got to change the economic and business realities of a firm. One of the ways Ryman Healthcare is adding value is it's building new retirement villages like there's no tomorrow. It's building a lot, and it's building them and being able to sell occupation rights with large profit margins compared to the cost of building them. So it's changing the economic and business realities of the firm in reality, not just changing the accounting treatments. So it's important to engage with and deeply understand a firm's strategy. And it's not quite as straightforward as you might think. It's just sort of reading what they say. Mintzberg's concept of strategy, that strategy video is a great one to look at. And again, that link is live on the slides. It's also in the video. It's the video for week 2, the short video in the video section in Moodle. And these are the videos like this one are key parts of the content, just like the study guide. Strategy is our view of patterns of previous actions of a firm. How it adds value to equity investors to the extent it enables use of equity capital to earn returns greater than its cost of capital. So we can view strategy as our view of previous patterns or previous actions of a firm, of how it's been adding value. So Ryman Healthcare has previous patterns of behaviour and actions, and Mintzberg has some excellent material in there. So that's what you're going to be doing for your firm, coming to grips with your firm's strategy, and then applying it, and that'll be the basis. That'll be an important basis for you when you come to forecast later on in the term for your firm. So it's important to come to grips with the firm's strategy before we look at the financial statements. The other thing that's important to do before looking at our firm's financial statements is to ask ourselves, can our firm's accounts be trusted? We need to be cautious and wary when looking at our firm's financial statements. We need to be wary of relying on facts in the financial statements. We need to come to grips with how much we think they can be trusted, how much the accounts might be connected to reality. It is a matter of moment. It is a matter of great moment to the analyst that the facts be fairly presented. And this means that we must be highly critical of accounting methods. It's Benjamin Graham and David Dodd in the classic security analysis book. So we've got to have a critical approach to the accounts. We don't just accept numbers. And we need to be aware that there's a lot that the accounts leave out. And important areas are the ability to generate positive NPV investments in the future. Ryman Healthcare has been able to develop positive NPV investments in new retirement villages consistently over 20 years. And it's building quite a few at the moment. It has that ability to generate positive NPV investments in the future. There is nothing in its financial statements recognising, there's nothing in the accounts about that. It's not in the accounts. That ability that it has to do that and that prospect. And also the opportunity cost of its activities, that's its cost of capital, is also not in the accounts. So the accounts leave quite a few things out, and they're two big areas that it leaves out. And we can see that, here's just a list of listed companies in Australia. CSL, JB Hi-Fi, Wesfarmers and Ryman's, and their market caps. You can see CSL 122.6, JB Hi-Fi 5.5, Wesfarmers 59.4 and Ryman's 5.0, totaling $192.5 billion. That's quite a lot, isn't it? But then when you look at the book value, CSL's book value is 8.4 billion, JB Hi-Fi 1.3 billion. This is the book value of equity. Wesfarmers 9.7 billion, Ryman's 2.8 billion, total 22.2 billion. And the difference is in the next column, which totals 170.3 billion. Of the market cap of those four companies totaling $192.5 billion, 170 billion is left out. There's only 22.2 in the accounts. And the difference on average there is 89%. So there's many companies, and that may well be your company too, its market cap will be a lot more than the equity of the firm. Ryman Healthcare's equity is 2.8 billion, quite a lot of money. Market cap 5 billion, so there's 2.2 that's been left out. So there's a lot of value, if you can believe the market caps, there's a lot of value left out in the accounts.
Martin, may I ask you why the company would do that? What's the reason they will leave out this account where it is for them? Isn't will be?
Well, this will be for all firms. These are the accounting treatments, and some of the reasons are we don't include various things in the accounts. We don't include the ability to generate positive NPV investments in the future. So there's all this prospect of value add that's expected and being worked on, like Ryman Healthcare's building developments and stuff, but none of that value is in the accounts currently.
And I'm asking why that. Would be like they would love to attract more investor, because when the investor will see more of this number, will be more happy and will.
That's right. We could put these into the accounts, but it would require a lot of judgments about the future. And what would be the risk? Say we let people do this. We could, the accounts could say, yes, you can put into your assets the ability to generate positive NPV investments in the future. And so you can make some judgments about the future and some of the forecasts of profits that you might make and add that in, which is essentially what the market's doing in terms of coming up with the market capitalizations, the share prices. We could do that in the accounts, but what would be the risk of doing that? The risk would be that management could be tempted to be very optimistic. They could make judgments about the future that are, a bit rosy coloured and very positive in order to improve the accounts.
So you mean, Martin, these figures are just like a future expectation, right?
Yeah, these are all future. These are all future things.
Okay.
These are things that the accounts don't include. And the reason is because the judgments are so subjective that it's very hard to assess those judgments if you're outside. So we don't do it. And the management could be very tempted to be overly positive. But you can see how much we're talking about. There's a lot left out of the accounts. And if you compare the market value with the book value of equity for a lot of firms, you can check that out for your own firm. And these are some of the reasons, I put in there. But the accounts do leave a lot of value out largely because accounting doesn't include future. It has very limited judgments about the future embedded in the accounts. And the problem is because of the subjectivity of those judgments. Now, Ryman Healthcare earns abnormal earnings. I put here back to 2015 to 2021. There's its return on equity. You can see it sort of bounced around a little bit, but it's basically been sort of mid-20s most of the time. It went down a bit in 19 and 20. The cost of capital, I've used 9.4% throughout. And so the abnormal earnings are there, often around about 15%. They're only 1.9% in 2020, but 15.5% in 2021. And there were quite a lot of COVID costs actually in 2020, but also into 2021 for Ryman Healthcare. Now the abnormal earnings, if you've got the Abnormal earnings were about 400 million last year, 2021. And you can see what they've been in the past. They've sort of been growing. That 2020 had a bit of a dip, but they've sort of, and 2019 a bit, but you can see how they've actually been growing the abnormal earnings. Ryman Healthcare has been consistently earning abnormal earnings over many years, 20 years. So who studied economics? What does economics say about being able to earn abnormal earnings?
Look at that, Martin, that's going back 5 years.
5 years ago. Yeah, what does it say? Is it possible to earn abnormal earnings?
I don't know, I can't remember. That was too long ago.
Too long ago. Didn't you learn it properly? You can't remember it.
No, I can't.
No, it's not good, is it? Well, economics, some of the key assumptions as a rational person. Economics assumes everybody's rational, perfectly rational. Does that ring a bell? So everybody's completely rational. It also has a number of other assumptions that about how the world operates. We know these assumptions aren't correct, but they're very powerful assumptions and they allow us to make all sorts of assessments. But economics assumes that any abnormal earnings over and above the cost of capital would get competed away. The markets people will come in and build retirement villages and say with Ryman Healthcare, and that'll compete the prices down and it'll turn into the abnormal earnings will be zero. So, okay, for a little while you could until the competition competes it away. That's what economics is about. But, of course, some companies, Ryman Healthcare as an example, can earn abnormal earnings consistently for decades. So why is that? So finance theory, economic theory as well, finance theory says it's not possible to ever earn abnormal returns, actually. Finance theory says it's efficient, the market's efficient. They'll compete them away immediately. Economics a little bit loose around the edges. Well, Ryman Healthcare has a market cap of $5 billion, book value of equity $2.8 billion. The difference is $2.2 billion, or 44% difference between its market capitalisation, which is the price of shares trading at the moment, and its book value of equity. So why is that? Well, it's the ability of Ryman Healthcare in the future to generate positive NP investments. That is developing new retirement villages and extending existing ones. It's been doing it for a long period of time, very profitably. It's got a whole lot of projects in train. You can sort of see where they're all up to. And so you can take a judgment around its ability to do that in the future. And also its ability to generate returns greater than the cost of capital that are invested in its existing activities. So Ryman Healthcare is also able to generate returns greater than the cost of capital on its existing activities. So it's both that ability to generate NPV investments on new retirement villages, on new investments, and also its ability to generate returns greater than the cost of capital on its existing activities. These two abilities that it has are key reasons why its market cap is a lot higher than its book value of equity, because neither of these two aspects are included in Ryman Healthcare's accounts. What the accounts leave out: the strategic choices of management, positive NPV investments in new assets, returns greater than the cost of capital on existing assets. This is why we need to assess a firm's strategy. We need to identify key aspects of value a firm's financial statements might leave out. So that's what we're going to be looking at with our firms at the moment. Make sure you have a look at that short video on strategy with Mintzberg's approach and spend some time thinking about it. This will pay off later on. These are new firms to you. I've been involved with Ryman Healthcare for a long time, more than a couple of decades. That was an investment in one of the private equity funds that I was chairman of before that. So I've known this company for a long time, but your company is quite new to you. So you're just getting used to it. So there's lots to find out. So that's one aspect about what the accounts leave out. Another aspect is what accounts confuse. Now, financial statements are constructed by management. They don't just come out of thin air. They've been constructed by management, and there are two factors at play here. One is there's a whole lot of regulations and rules in accounting. You probably figured that out in your accounting degree. But there's also flexibility. It's a trade-off between rules and regulations and flexibility. And that's where judgments come in. The regulations and rules can be very strict and they apply to everybody. And that can be a problem if the rules don't quite fit your company. You know, it doesn't really work well. And so they can make it harder to see the real world because you're following some rules that no rules will apply brilliantly to every situation. But we could, and the International Financial Reporting Standards do a lot of this, give some flexibility, give some judgments. And there's a lot of fair value calculations and a lot of other judgment areas in accounting and the International Financial Reporting Standards. And if you give a lot of flexibility, that's good in that the management can decide to present the accounts in ways that reflect what's really going on rather than being forced to follow some rules that may not work too well. But alternatively as well, management could decide to use those judgments to make things look good, better than they are in reality. Also, accrual accounting underpins our accounting rules. And that means there's management judgments about the economic consequences of current business activity. Accrual accounting is, most people who know nothing about accounting think accounting recognises transactions and economic events in the accounts when cash changes hands. But accrual accounting, no, cash can change hands at different times to when the when the actual economic substance occurs. So you may provide some products or services to a customer, but they may not pay you for a month or two. But you've delivered the service or products and the customers got them and used them. And so the economic substance of the revenue has occurred. And the economic substance of expenses can have occurred without the cash having quite changed hands yet. So there can be some judgments around accrual accounting about when and how the economic substance of a transaction has occurred or not. Different people might have different judgments. So one of the key things we're doing when we're looking at our firm's financial statements now is we're asking ourselves this: what am I, like Ryman Healthcare, what are management trying to do? Are they trying to communicate the reality of the firm to outside parties? Or are they manipulating perceptions of outside parties about reality of the firm? Are they trying to make it look a certain way to make it look attractive? So if I'm management, I can be thinking that. Am I going to communicate the reality of firms to outside parties, or am I going to manipulate perceptions? How will I do the judgments? Which will I do? And when I'm the analyst, I'm thinking, which one is happening with my firm? You know, what are management doing? You've got to make some judgments and assessments about that. Now, one of the things we can do is look at bigger items in our financial statements. Which bigger items in our financial statements have a lot of judgments in them? And they'll be different for different firms. But for Ryman Healthcare, it has a big item is the revaluation of properties. It's a very big item in Ryman Healthcare's financial statements. So one of the things to look at is the basis for the revaluation of properties. What basis is it done? How frequently? It has independent valuations done, but there's a basis for them. They instruct the valuers in certain ways. So Ryman Healthcare's revaluation of its properties is basically based on residential house prices in the area around the retirement villages. That's a big driver of the values. They could have other bases. They could be different. For example, you could value its retirement villages on the basis of a portfolio of properties that you could securitize and sell in the wholesale markets at certain percentage returns, and you could capitalize them on that basis. If you valued them on that basis, you could come up with quite a bit of a higher value for the properties than the basis used. So there's a and that's all disclosed in the footnotes, the basis for evaluation of the property. So that's something important to understand about Ryman Healthcare. And also the timing of recognition of revenue. And revenue is usually a big item for most firms, and there's invariably judgments around that. So that's something to look at. And you can look in the footnotes and get a bit of a sense of the timing of the recognition of revenue, how is it recognising revenue. Other areas that are often the case, bad debts, depreciation rates, all judgments, recognition of revenue and basis for evaluation of properties are 4 areas. So you can have a look at your firm, particularly for larger items where there are a lot of judgments. And you need to make some sort of assessment about whether you think those judgments are being made in a reasonable way, where they're seeking to show what's really happening, or whether they might be trying to cook up the books. But the key with all of this is only focus on what is significant. Big items, there'll be lots of little items with there'll be a lot of judgments in them, but the judgments won't make much difference because the items are pretty small. And the principle is this: firms cannot add value by changing their accounting treatments. And firms do change accounting treatments from time to time, but that doesn't add any value. The underlying firm is exactly the same, regardless of which accounting treatments are used. So what's the takeout? Understanding our firm's strategy. We're interested in our firm's future earnings. We're going to be focusing on that as we progress through the unit, particularly in the later part of the term. And keys to understanding and forming worthwhile judgments or convincing judgments about a firm's future earnings is understanding the quality of a firm's strategy and how well it's going to be implemented. So you can have a great strategy and poorly implemented, it's not so good. Ryman Healthcare has a clear strategy. It's developing retirement villages in New Zealand and in Melbourne and surrounding areas. That's its strategy. And it positions itself in various ways in terms of the type of retirement villages it does. It doesn't buy any existing ones and sort of refurbish them. It's always brand new. It buys the land, and it's got sort of a portfolio of land, and then it goes through all the approval processes, and it builds these retirement villages in locations where people in the surrounding suburbs, there's good demand for retirement villages. They've got that sort of age group. So you can look at the quality of the strategy and how well it's implemented. Ryman Healthcare's got very good at implementing its strategy, and you can make some judgments about its future ability to do that. One of the questions for Ryman Healthcare is that it's growing so much that it just huge amounts of development going on now, huge amounts of retirement village units, occupation rights in retirement village units to sell. Is its capacity to do that being diluted? Is it able to keep recruiting good quality staff? Is its culture starting to change? And there's some of the issues to get a bit of a feel for Ryman Healthcare. And the accounting treatments. So the strategy and the accounting treatments, are they confusing or enlightening? Is Ryman Healthcare trying to tell me stories, or is it trying to tell me what's really going on? So let's do the minute paper now. What was the most important thing you learned today, and what questions still remain unanswered? So if you go into Socrative, I'll give you a minute, you can answer these 2 questions. When you go to a lecture, or if you're just watching a video, or if you watch a video or read a bit of material, a very valuable thing to do is to ask yourself at the end, you might have spent an hour looking at something, what was the most important thing I learned? What was the thing? And write it down. It might be just a sentence or 2, which is what you can do now. You can do it watching the video. And what questions remain unanswered? What's still not clear to you? What do you want to know? And if you do that, this can really increase how much you retain and learn from the material that you've been exposed to or read, by 50% or huge proportions. So what have people said? What was the most important thing you learned today? What questions still remain unanswered?
Martin, I haven't put anything down because I'm trying to find where my Socrativ's gone.
Do you want to just tell me? What was the most important thing you learned today, Kim? It could be anything. And you can say nothing. I didn't learn anything.
Just like that there's more to the financial statements than the actual figures. So you've got to look at to get a really good understanding, you've got to look at different areas like the reality of it and the figures. It's just not figures, if that makes sense.
It does. You're saying that you don't just take the numbers as they are, you assess them critically.
Yeah. So you don't believe exactly what you see. You've got to sort of think about it as well to see, is it correct? Are they correct, and to what extent?
That's right. You've got to be critical because there's a lot of judgments in the numbers and you have to make some assessment about that. Don't just accept the numbers. There's a lot of stuff that goes on. So be critical. And it's the same with trying to discern the firm's strategy. And it's being critical and not just accepting things at face value. These are important skills in accounting and also, obviously also in investing. That's a pretty good thing. Anybody else? What was the most important thing you learned today? Peter Finn, didn't learn anything too new, but got a flashback to the past of economics, which was fun to think about. What do you mean, Peter?
Just the theories on the rational person and all the rest of it, the assumptions that you make in economics.
Yeah, and in finance, that's right. Whereas accounting, we don't do that. We sort of assume that people's judgments they'll make mistakes. You see, the rational person means that people get everything right. They perfectly predict the future. It's all sort of like a perfect world. Whereas accounting's not like that. We think differently. It has implications for things like the concept of opportunity cost in accounting compared to the concept of opportunity cost in economics. Peter, what's the concept of opportunity cost in economics? How would you describe it?
Could you repeat the question?
Oh, in economics, the concept of opportunity cost. Did you come across that?
No, sorry.
No, you can't recall that. Okay.
No.
Opportunity cost. You see, in economics, because everyone's rational, what will a rational person do? Well, they will put their money into the best option, won't they? They're rational. And the opportunity cost is the next best option. That's in economics and finance. That's the concept of opportunity cost. It's the next best. It's the second best option. That's what you could have done if you didn't do the best option, which is what the rational person will do. But in accounting, we don't assume people take the best option. The opportunity cost is the best option. It's the best option you could do, given the risk and return. That's the return you could get. It's the opportunity cost. And you may choose a better or worse one than that, So opportunity cost isn't the next best option. It's the best option, if you like, which you may not necessarily choose because we think of people as just making mistakes. Not everyone's perfect in accounting. Don't know if that makes any sense, but that's something. Anybody else? What was the most important thing you learned today? Kim, what was the most important thing you learned today?
We've just been through that one.
No, we have actually. I want to go, what questions remain unanswered, Kim? Do you have any questions that remain unanswered?
Not yet.
Not yet.
Not yet. There's sort of, you're covering pretty much, everything. So you've answered my question.
What about how are you going to come to grips with your firm, whether you can trust your accounts of the firm? How are you going to go about that?
I suppose I just got to look at, I don't know, I think I've got to sort of sit there and research a bit more about it all before I make any assumptions on them to see what I think they are. That's
a non-answer. What do you mean? What you could do is look at the big items.
Yeah.
You know, that'll be different. Like Ryman's got a big item it's got a lot of property revaluations. So there's a big item. And I'll look at, they've got footnotes and other things. I'll look at the judgments involved there. I want to understand what the judgments are and whether I think they're likely to be all right or not, or whether I'm concerned they might be under or overstating value. But there'll be small items, and depreciation is not such a big item. You see, there are lots of judgments in depreciation, but that's quite a small item for Ryman Healthcare. So whether the judgments are this or that probably won't make much difference. Well, it won't make much difference to Ryman Healthcare. So, but your firm might have a lot of depreciation. So you'd have a look at what assumptions it's making around that. Sometimes firms change their valuation. Well, they do from time to time. They can easily change their valuation method. So if it's a big item and they've changed their valuation methods from one year to the next, you might want to understand that and what impact that might have. Does that make sense, Kim?
Yep, you've given me sort of, look at it a different way. Yep.
Anyway, being critical, that's the idea. Don't just accept things passively, come to grips with it. And that's what Jane was saying, they're looking for with people with a questioning mind.
Sorry, Martin. When you say that we have to look at the big item, what do you mean exactly by that? Like, I know we have depreciation on these figures. So when we try to look at like the annual report, what we have to look for?
Right, by big items, I mean in dollar figures.
Oh, in dollar figures. So which one is the most?
Like if your depreciation is 5 million and your assets are $1 billion, it's a small item. But if your depreciation is 500 million, and your profit is 10 million, that's a really big item. That's really affecting your profit, isn't it? So you'd want to understand, and you go to the footnotes, there are different assumptions around, there are choices on how you do depreciation. And so you can have a look at what judgments they've made and make some sort of assessment about whether you think. So you might look through your firm, I'm just using depreciation example, but you might it might have a lot of depreciation and they've changed their basis of doing it 1 year. And that might have really switched their profitability a bit.
Oh, okay.
And then you ask yourself, was that reasonable or not?
Mm-hmm. Yeah, I got it now. Yeah.
Which big items, if it's a little item, then I wouldn't worry about it.
Mm-hmm. And then I have to compare it with whatever the asset or the revenue I have. So I will look I will have a look on all of that.
Have a look at some of those items, and I've indicated here some of the things you can look at that have judgments in them.
Yeah.
And then you can write up in your assignment, you can just write up what you thought about and why you think that might be reasonable or not, or whether you've got any concerns. Mm-hmm. That's that critical thinking and the ability to look at it. And you're drawing on your previous studies and knowledge about different accounting treatments for different items.
Yeah, absolutely.
And, for property, plant and equipment, and, you might have it, how you can value it at cost, or you can value it, or you can be revaluing it to fair value, different areas. So yours might be revaluing to fair value, say, and then you might, or it might be the other, but so it's that. And then you're looking at, there's a lot of judgments around what fair value is. And so you could have a look at that if it's a big item, it often is for many firms. And you're drawing on your studies of how you valued, how we account for property, plant and equipment. So it's all that type of thing. Do it now. Have a bit of a sense of it now, because that will help you as you're trying to make sense of the accounts later on.
Yeah.
Does that help a little bit?
Yeah, absolutely. Thank you so much.
So this is all practice of being critical and trying to make, yeah, that's good.
Mhm.
So what we've looked at this week is we've looked at a firm's strategy. There's a great little video. This week's video is on strategy. Look at that. And Mintzberg, we're using Mintzberg's structure on how to identify our firm's strategy and make some judgments. So identify what you think your firm's strategy is. You can put that in your assignment. And then you can make some judgments about whether you think it was going to be effective in the future or not, and whether there's evidence that it's been working in the past or not, or might be a brand new strategy, and get some views around all that. This is going to drive your forecasting as when we get to it later in the term. And then also, can the accounts be trusted? Is there anything, and your general view might be, yeah, I think this is pretty good. I get it looks like they're trying to tell you what's really going on, and you can give reasons why you think that, or you might have a few concerns that they might be trying to cover up some things or do, make things look a little bit better than they are through the treatments of certain items. Now, next week, so that's this week. Next week, we're going to ask ourselves, what do analysts do? What do they actually do? We're going to be looking at fundamental analysis. But there are many other approaches to looking at firms and valuing them and analysing them. So what do equity analysts or private equity analysts do in the marketplaces in the real world? And then we'll be having a look at, within those different choices and different ways of analysing, we'll be focusing on fundamental analysis. That's the type of analysis we'll be focusing on. That's what we're doing next week. But this week, make sure you come to grips with your firm's strategy, start getting engaging with that, and also make some sort of assessment about how trustworthy you think your firm's accounts are. All right, well, thank you very much, everyone. A number of people can be tempted to cut corners on coming to grips with their strategy and also whether your firm's accounts can be trusted. But these are very important, and these will, if you get the better grip you get on your firm's strategy, the much more convincing will be your projections and forecasts for your firm, because you'll be able to connect them to what you think the firm's strategy is and why. All right. Well, thank you very much, everyone.
Thank you so much, Martin. Much appreciated. Thank you.
Thank you. All right, then.
Thank
Bye-bye
you,
then. Bye.
Bye.